So, in my opinion, this particular story has not changed for the last 15 years, wherein the Indian consumption story was shown as the next big growth wave after the Chinese story. And so, a lot of Silicon Valley VCs as well as major investors in US wanted to take advantage of this particular, scenario, right? And the expectation even in 06, 07 time frame was that India is going to become the next big thing after China, and but sadly India is kind of
Stayed the same.
I wouldn't say stayed the same, but disappointed to a great extent, right? Even from the VC perspective, some of the funds in China have done so stupendously well. Like for example, Sequoia China is probably one of the most profitable or most successful VC firms. Even if you look at China, Sequoia US, but India has not been that case.
I was looking at AUM, assets under management of Sequoia China and Sequoia US. Very close. I think Sequoia China is about $56 billion, and I think US is, I don't know, close to that. I think $59 billion.
Correct.
Only a couple billion difference.
Absolutely. But the Chinese one have done even better because they did it in a much more compressed time frame, right? So they just did it in the last 15, 16 years.
Right.
When compared with Sequoia US, which
50
has
years.
taken like 40 years.
Yeah.
I think 1970, 1980s or 1970s, I think they started.
Why do you think that is though? Like Indian market has not delivered. Like I was also looking at in prep for this. I think I don't remember I don't know if it was Tiger Global or I think it was Tiger Global CEO. He was mentioning even his complaint was, and this was very recent, 2-3 months back I think, where I think he was talking about how even they have been a little disappointed, or they have the slow results have been a little shocking, or I'm paraphrasing his words here, but to that sentiment itself, it's been like, I don't know, 15 years, 20 years, and
the returns have not yet come, right? So I think the Indian market is, there are two problems with the Indian market. One is, of course, the slow pace of reforms that has taken up, and the second thing has always been the infrastructure has been a big bottleneck. And I'll also add on third reason is that the per capita income of India has not grown as fast as what the Chinese per capita income has done, right? And to a great extent, if you look at how China has done that, through their one-child policy, which probably is going to bite them today, but in the 20 years back, they had most of the population which was in the working age population, right? And so that helped them really accelerate their growth, and they, I think 2001 or probably 2000, they joined WTO, and because of that, manufacturing really picked up, and so the first 7-8 years probably manufacturing did well, which really improved their per capita income. So it grew really fast, right? So China has been growing like 8 to 9% for the last 30-40 years. So in the mid 2004 2005. China was able to really take off, and they were probably the largest market outside US, wherein so much of money could be pumped. And in 2007 2008, I'm sure you also recollect, though I'm not sure you're that old, but the thing is, in 2007 2008 we had this great financial crisis, and during that time the Fed started reducing the interest rates, and for the last 15 years we have been having a low interest rate regime. So when the interest rates was reduced, a lot of capital was produced, and you can say exported by the US, and the biggest beneficiary of that particular pumping of money has been China.
Yeah.
Right.
And the difference is huge, right? Like even today things might be different. I think China, there's a huge slowdown, I think, in the inflow of capital. But if you go back, I think 2 years back as well, I think the amount of money being pumped into China, I think 1/3 of that was being pumped into India, I think, or even maybe less than that.
Maybe far less. I don't have the exact number, but I'm not surprised if it is even 1/10 or probably 1/5 of what China has been able to consume, right? And that's partially because of the way the trade imbalance is there between the US and China, right?
What do you mean?
So, for example, if an iPhone is produced, then China exports those iPhones to the US, and US gives dollars to China. So what does China do? That it has to invest in the US. It doesn't want to invest locally because then inflation will shoot up, or it's a communist regime. They don't want to encourage consumption, different reasons. So they invested in the American, economy, primarily in the form of treasury bonds.
Okay.
But even some portion of it is, again, it finds its way back into the VC world, or I would say the non. You have to also understand that in early part of China, the capital markets of Chinese, stock exchanges were not as well developed as even India, right?
What do you mean?
For example, I think till recently, or probably till 2010, 2011, India was having the largest stock exchange, right? BSE and NSE, if you put them together. There was a good depth in Indian stock exchanges, right, when compared with the Chinese stock exchange.
Okay.
It was again very superficial, only at the top level. There's not much trading volumes and all that, and plus it was heavily controlled by the government and all that. It's only that, probably in the last 10 years that they started giving up some of the controls, but now they've again, taken back. So it's like
there's been a huge crackdown.
There's been a huge crackdown
in China.
Right.
But
the crackdown in China was more, say, in the tech entrepreneurs,
yeah,
right, which happened recently. But in the past, a lot of the crackdown that happened, was on the public market side.
Which is still okay, right? In the sense that, they have reached a certain level of per capita income, or, their society has grown so much that now it feels like more of polish and is that
so
fair to say?
The per capita income grew much faster at a very short period of time. There's no country on earth which became as wealthy as China in such a short period of time. And with such a massive country, right, with such a massive population. So, the China and many of the funds, right, like from Sequoia to, IDG, then there was a slew of VC funds from Silicon Valley which went and invested in in China, and they made a huge killing, right? They in fact have outperformed many of the US funds.
Mm-hmm.
So that enabled more money to go back into China. And secondly, a lot of the innovation that was happening in the US required the China backbone, because China had to export, right, in terms of manufacturing capabilities. So initially China started purely as a low-cost manufacturer, but then they've also grown up the value chain.
Right. No, that is fair in the sense that, but that is mostly for these large companies who want to outsource their manufacturing, in that sense you're talking about, right?
Yes, but not only manufacturing, but anything, right? So from APIs, for example, you look at chemicals, which any pharmaceutical or biotechnology company in the US needs, almost 80 to 90% comes from China, right? So any industry you take in the US, the supply chain starts from China.
Okay.
And so while we see a lot of consumer tech investment, that's what we all know and read about, but majority of the investment has gone into actual, material science innovations or, manufacturing sectors, and many companies like, Foxconn and all that were funded by the Western capital.
And that's what's causing them the most worry today.
Today they're all extremely worried.
Right. I think we'll touch on that. I'm going to switch this off for now. Let me know when you want to. Let me know when you start feeling hot. Okay.
I think now it's cool.
Yeah. I'm mostly worried about the sound, actually, more than anything else.
I get it.